joining for this webinar. So this webinar is conceptualized keeping in mind the requirements of all the fellow Indians who are staying abroad like you all. And this webinar is divided into 3 sections. The first will be introduction of Max Life. And the second will be why investing in India is a great opportunity for NRIs and OCIs, and what are the available tools and benefits, and what are the tax implications. The third will be question and answers round. So we will take it to the end. So please feel free to put your questions in the chat box. And so let me introduce today's speakers. We have Mr. Dinesh Mantri, who is a qualified chartered accountant, and he's heading NRI business with Max Life. And he has an experience of more than 17 years in insurance industry and has his expertise in insurance, NRI business especially. So with this, I would like to invite Dinesh. So thank you so much for joining again. So over to you, Dinesh. Thank you.
Thank you, Archana. You're able to hear me, Archana?
Yes, Dinesh, loud and clear.
Are you able to?
Loud and clear.
Thank you so much. Thank you. Thank you, everyone. Good morning to all, all our guests from US, Canada, and good afternoon to people who have joined from Europe, and good evening from if you're joining from Middle East countries. So thank you so much. Thank you so much for joining in. Thank you so much for your valuable time you are going to share with us for next 60-65 minutes. I really appreciate that for joining in. Thank you. Let me begin this by a introduction. As Archana mentioned, that we will share in few segments about what is we will talk about brief about Max Life Insurance. We will talk about why non-resident Indians are investing money in India as an investment purpose. We will share about what are the different opportunities and options which non-residents are investing in India, and we will also talk about some of the issues about taxation, questions about repatriation, and NRE, NRO, and many other options available for investments. We will also take your questions. If you have any questions, please feel free to put that in chat box, and we will be able to take that questions at the last. So thank you once again. Let me start this presentation by introducing the organization which we represent. Our organization name is Max Life Insurance. Max Life is a joint venture between two organizations. One is Max Financial Services Limited, which is a listed company on Bombay Stock Exchange and National Stock Exchange of India, and it's part of $2 billion Max Group, and it's a holding company of Max Life Insurance. It owns around 72.1% stake in the organization. The other joint venture partner is Mitsui Sumitomo Company Limited, and Mitsui Sumitomo Insurance is a insurance group which is based from Tokyo, Japan, and it has a presence in 39 markets globally, and it has experience of almost 120 years in general insurance across the globe. World's largest general insurance company. So that's a joint venture between these two organizations, and the vision of Max Life Insurance is to be the most admired life insurance company, and to be the most admired life insurance company by securing the financial future of our customers. And when we talk about most admired life insurance company, we mean to say that we do not want to be number 1, number 2, number 3 in number game about how much business we do. We really take care of the clients. And when we say at most admired, we say whenever a client wants to buy a life insurance or wants to invest some money, then the first organization which he should think about should be Max Life. All our acts, all our work is directed towards this vision of the company. Let me share with you some of the briefs about Max Life in numbers. Max Life is the 20th year of operations in India, and in 20 long years we have built around 300 offices. However, now in current situation, it doesn't matter how many offices do we have. What matters is, are we globally present? Are we digitally present? So we will be happy to share with you that we are completely digital. All our processes are completely digital. Anyone from anywhere in the world can look at the processes of the company and go digitally. We have 14,000 employees and we have 60,000 agent advisors. We have our asset under management, which we manage for our clients, is 68,471 crore as of 31st March last year, 2020. We are among the top rated companies in terms of works, great place to work. We are 24th rank in the entire in the entire country, and we are number one in life insurance space. It clearly means that when employees are happy, they will always take care of the clients. From a claim settlement point of view, which is the most important when it comes to life insurance, 99.22% is our claim settlement ratio, which is the highest in the industry. We are among the top 10 in fund managers of the country, which includes all mutual funds, which includes all life insurance and other fund managers. If I talk about how many claims do we pay and how many maturity claims do we pay, every 8th minute, so by the time we just completed our some 8 minutes in the webinar, on an average we would have paid one maturity claim. So every 8th minute we pay one maturity claim. God forbidden, if in case of eventuality in the family, then we pay one death claim every 30 minutes as of last financial year. What we also want to tell you is we have a unique thing which we help in clients. As I mentioned, that our vision is to be the most admired life insurance company, and one of the act which we have done is insta claim, which means that in case of an unfortunate event of death, the death claim is paid within one single day. If the insurance is completed 3 years and it is less than 1 crore of insurance value, then the day when we receive all the documents by 3 p.m. the same day, we pay the claim. And if we are not able to pay for any unforeseen circumstances, maybe bank is closed or whatever is the reason, then we pay interest as well in case we are delayed. Our claim settlement ratio has performed really well over so many years. There is a graph which is on the bottom side, right hand side. You will see it is growing every year, and that's what we really live the value of and the purpose what we are built for. So that's about a brief about the organization as a company. Let me now go to the next section of why non-residents are investing money in India, which is the most important segment of this webinar. The first important thing is that, do NRIs or non-resident Indians, and I say NRIs, I also include OCIs who are overseas citizens of India, do they really invest money in India? Answer is yes. World Bank report says that India has been the top remittance receiver, not only in 2018, 19, over last 30 years in a row. Since 1980s, India has been the top remittance receiver in the world. In 2018, India received 79.5 billion US dollars as a remittance from individuals, and it is not from organizations and corporations. It is about from individuals. In 2019, India received 83 uh, billion US dollars as a foreign remittance. There are many reasons why NRIs are investing money in India, and there's big reason why so much of money is coming to India. Because more than 3 crore individuals who are from India or who has a background from India or their parents are from India, they reside outside India. And India gives them very high rate of returns when compared to other foreign countries. There are other investment options which people are looking at when they invest money in India. Let me show you some of the reasons what has happened in over few years and in current situation as well, that non-residents including OCIs are investing money in India. Now, uh, the first and important thing is, I am sure all of you would have seen in earlier past, before the pandemic and lockdowns, that the Indian GDP was growing at the fastest rate in the world. India's GDP was growing at the fastest rate. In current situation, almost all the economies of the world are struggling, including India. However, IMF, which is a International Monetary Fund, the largest fund of the world, has predicted and projected that India will be in the year 2021 and onwards, India will be again in the one of the fastest growing economies of the world. And the reason why people have done, we are talking about it because many foreign organizations and corporations have invested a lot of money in India in current situation as well. They have a very positive outlook about India, and that's why India has received the highest amount of foreign direct investment from corporations and organizations from abroad. um, I can name them if you want to. They are Saudi Aramco, Facebook, Google, Microsoft, Amazon, and many other organizations and large value, Apple, many other large value organizations have invested a huge amount of money in India. It clearly means that there is a positive outlook, what people are looking at from when they are investing money in India. Now, if you look at uh, you know s- another slide, which we will talk about individuals, and this is the most important thing when it comes to investment. Not only Indians in India, but abroad, or anyone for that matter across the globe. When an individual invests money anywhere, they invest in four different asset classes. uh, I'm sure you would have done in many investments. I'm sure most of your investment would be falling into these four asset classes. First asset class where people invest is equity. The second asset class where people invest is metals, which is gold, silver. The third asset class where people invest is real estate. The fourth asset class where people invest is guaranteed products, which is products which gives you guaranteed returns, safe and secured money. Now, all four asset classes are important for an individual perspective because all four of them are different. And I believe, in my personal opinion, and many financial planners' opinion, is none of the asset class is comparable to other asset classes. So we should not compare, ideally, we should not compare equity with gold, or gold with guaranteed products, or guaranteed product with real estate, or like that, because every product has its pros and its cons. As an individual, appropriate asset allocation is a must, because all four of them has different pros. So let me give an example. Equity, I'm sure you would have invested in your money in equity. If you're then Equity gives you very high rate of return, but it comes with high risk, and there is a risk of fall. We have seen in recent past as well, in month of February and March. The benefit of equity is they are very liquid. We can sell off anytime whenever we require so, until unless it is not invested in penny stocks or PMS. In gold and silver are very good hedge against inflation and falling equity prices, and not so good economy. That's why gold and silver has prices have rose so much high that they are lifetime high. But it's again, prices are subject to market conditions. Silver has rose to a big number, but it was at a very low level. In 2009, it went up very high, then it came down very low, and then it again went up high. They are also very highly liquid. Real estate is another investment where people do invest. Real estate gives you rental income and appreciation of value over time, but these are also subject to maintenance and ownership costs like property taxes and others. They are not liquid. If we want to sell off, maybe in a week's time or so, then we don't get that amount of money which we require. So all goods and drawbacks are available in all other asset classes. Same is the case in guaranteed products. The pros is it gives you guarantee, it gives you safety, it also keeps security, uh, and it gives you peace of mind and gives you a guarantee rate of return. However, those returns are lesser than all other three asset classes. Now, do we require all our money to be invested in equity? I believe so. It is good depending on the age you are. If you're very young, then good amount of money can go into equity. But if you are middle age or around 35, 40, 45, I think some good amount of money should also be invested in guaranteed. Some good amount of money also should be in silver and gold. And if you have lump sum value and the property is good, then definitely real estate is also a good investment. So as I mentioned, asset allocation is really very good. Now, life insurance as I mentioned, we will talk about that in detail. However, let me share with you about India. when it comes to investment in all four asset classes. There are options available. You can invest in your own country in these asset classes, and there are options available. You can invest in India. So let me go to another slide which talks about equity, and we have tried compared equity return in India. Archana, if you can go to the next slide, please. So this chart is available in front of you. Little busy chart, but we will share this by email, which you have mentioned to us, so that you will be able to get to know in details. The data is absolutely available online. You can very well look at this data in any of the websites. We have compared Indian equity market versus different other markets of the world. Different other markets like you have London Stock Exchange, New York Stock Exchange, the Dow Jones of US, S&P 100 of US, Nikkei of Japan, Hang Seng of Hong Kong, Straits Times of Singapore. These are the large equity markets of the world. There are many other equity markets, Toronto Stock Exchange, maybe Abu Dhabi Stock Exchange, and many other exchanges. However, because of lack of space, we will not be able to share the details here, but the data is readily available. And the data which we have taken is equity returns over last 15 years and last 20 years. Let me clarify to you. Usually people talk about equity returns in 1 year, 2 years, 6 months, 3 years, 5 years. But why we have taken 10 years, why we have taken 15 years and 20 years is because of one very, very important reason. The reason is in last 10 years, which is before pandemic, before December 2019, the last 10 years, that is January 2009 till December 2019, that exact dates were always in bull run. However, equity market does not behave like that, or is not a right representation of how equity market works. Equity market has all ups and downs. It has fall, it has ups. However, in last 10 years time, this was not there. So therefore what we have mentioned here is last 15 years, because it has seen market fall down in 2008, then it went up. In 20 years data, it has many events, large events happened in the world. 2000, there was a dot-com bubble, so market came down. In 2001, there was a tragedy in the New York City, and therefore the equity market came down. Then it was a bull run. Then market came down in 2008 because of financial turmoil, and again it went up. So all ups and downs has happened, and therefore 20 years data is a true representation of how equity market behaves in a country. So if you look at the data, it clearly mentions Indian market, which is Bombay Stock Exchange, BSE Sensex, has given 13% returns against 3 to 6%, 6.5% of different other markets. When it comes to 20 years data, it clearly mentions 11% return over compared to other equity market around 0.5 to around 4.5%. So different markets have different uh, uh, you know uh, the kind of returns. This is the equity market. When it comes to gold and silver, let me come to gold and silver, which clearly mentions that wherever you buy, whether you buy in the US, Canada, or in India, the rate of return of gold and silver would not, the return which you get from there will not be very different. Yeah, there would be little difference because of the fluctuation of the of the currency. However, the difference will not be too much. Therefore, you can buy wherever you want to buy, whether in dematerialized format, paper format, or you want to buy in in physical gold or silver. Real estate is another investment which we mentioned. Real estate is a different investment which is very different in different countries. Even same city can be different, same place also can be different, because different places and the kind of land or a property or a apartment or a house which you buy can give you different kind of returns. So it is not comparable because there is no index to compare where you want to invest in. However, when you invest in real estate in India, there are subject to cost of maintenance, cost of ownership, and a taxation impact as well, which I will mention in little later part of the webinar, because this will help you understand about the taxation impact. There are good taxation impact on the returns which you get from real estate from India. So you should be able to take a qualified decision. When it comes to guaranteed products, there are many options available in India, which are or abroad as well, like municipal bonds, like bank certificate of deposits in the US, fixed deposits in many other countries, and there are many options like corporate bonds, the government securities. In India also there are many options available, including life insurance, fixed deposit of the banks, and bonds. So however, a lot of people are investing money in India in current situation because uh, the rate of interest in many countries has gone down drastically. In some of the countries it is almost near zero. In the US, if I say, Bank of America gives around 0.06%. In the UK it gives around 0.10 to 0.5 depending on different bank. In many other banks of the US there are many other rates of interest as well. In Australia, in Singapore, and many other countries of the Europe, you will find interest rates are very low. In current situation in India also, the rate of return has come down. However, it's still the gap is very high, and thus India is giving around 5.5% to almost six percent kind of returns, and therefore a lot of Indians, not only Indians living in India, Indians living abroad, OCIs living abroad, have invested money in Indian guaranteed products. So that's how the entire product or other options available, why non-residents are investing money in India. Let me share with you a few more next section about the kind of products a lot of Indians are investing in from abroad. They could be a different products, there are multiple options available, but we will share with you the kind of products which Max Life has got, and a lot of non-resident Indians are investing money in those products. There are many advantages over and benefits over different other usual products, and therefore you will be able to see value in these products. Let me share with you the next section about products, which we start with the story. I'll take a minute to explain you the story, and this will help you understand in a simplified way. So let me start the story with a story called My Third Child. If you would have heard this story, good, but otherwise it is a very important story for our retirement solutions. So this is a story of third child, where the story goes of Mr. Ram and Mrs. Ram, who has a small family, two children, and they work very hard, and they spend a lot of their earnings on their children education. I understand in many countries we don't spend money on our child's school fees, but we do spend a lot of money on their extracurricular activities, maybe swimming, maybe many other, or soccer, or extracurricular activities like those. So we spend a lot of money, and same is the case with Mr. Ram, who and Mrs. Ram, who work very hard and they spend a lot of their earnings on their children education. Now they meet with the advisor, and he asks few questions. These questions could be you can ask yourself, or the advisor can ask you a question. However, the question to this couple was, don't you think, Mr. Ram, that it is time that you also have to start saving for your retirement? So the couple says, yes, I want to save. However, the cost of education is so very high that we are left with little to save. Now, the next question which advisor asks is a very important question. The question is, if you are not planning for your retirement now, Mr. Ram, would you be okay to ask your children for your household expenses once you retire? I'm sure your answer would be same what this couple would have answered. How can I ask my children to spend money on ourselves after our retirement? I'm 100% sure I won't be comfortable asking for it. Exactly. So, Mr. Ram, if you had one more child, will you would you have given that child also the same level of education what you're giving to other two children? I'm sure the answer would be 100%. If I would have a third child, I would have done that. So, Mr. Ram, usually how much do you spend money on your annual fees? And this include all your extracurricular activities of your two children. And this is representation which this couple has answered, that we spend around 2 lakh rupees, and it is in Indian rupees, per year as school fees for by children. So, Mr. Ram, this in this time, I am asking you to adopt one more child. Mr. Ram, we are asking you to adopt one more child. Your child is this is the third child, and you fund this third child also with the same fees which you are paying for your other two children. And Mr. Ram, this third child has only one responsibility. That responsibility is to take care of you and Mrs. Ram in your presence and in your absence as well. I'm sure your children will look at you, but if they are not, then this third child has only one responsibility, to take care of you and Mrs. Ram in your presence and in your absence as well. And this third child is your retirement solution, which is supposed to be, actually you should always invest in. And I'm sure a lot of you would be investing money in a retirement solution. In the US, it may be a 401k or many other superannuation funds in many other countries. I'm sure you would be investing some of them. We have also a retirement solution. It's called as monthly income advantage plan. Let me share with you why it is so different and why it is unique. So in this, we have represented with an example with a 15 years payment options, and then you get a retirement money. So this, we have taken example of a person who pays 2 lakh rupees. You can choose whatever you want to choose as an amount. So this person pays 2 lakh rupees or 200,000 rupees per annum for 15 years. And after 15 years, this person, the family, will get a guaranteed amount of 3,81,168 rupees. And this guaranteed amount will be told at the first year itself while investing, that this is the amount you are going to get for next 10 years time. And this amount is not going to change irrespective of change in the interest rate. I'm sure you would agree with me that the interest rate does not remain same in the market. This is all guaranteed money. And this is not about equity. This is not about anything which are other three assets which I mentioned: equity, gold, silver, and real estate. It is completely guaranteed, safe, and secure. So this product gives you a guaranteed income for 10 long years, which is absolutely same irrespective of change in the market. And at the end of 10th year, which is at the end of 11th year, you are going to get almost similar amount of money what you actually paid. So you paid 30 lakhs, a lump sum value of 36 lakhs, 36 and a half lakh rupees will be given back to you as a lump sum value. Now, I'm sure you would say, what's so different? All your retirement products work like those. I agree. The number one thing which it does is it gives you a guaranteed income. No retirement solution gives you a guaranteed income for future and told at the time of actually investing at the first time. Now, the second point, this product also has a life insurance coverage. You will say, I also have a life insurance coverage. What is so different? This product, life insurance, is a very unique one. In this product, what happens is, in case, in unfortunate event of death during the time of payment, or any time, by the way, then a lump sum value is paid. So let's say Mr. Ram is no more in after paying 3 years, and then he is no more. Now his wife is still there. So I'm sure you'll agree, the retirement is not only for husband or wife. The retirement comes to both of them together. So therefore, she also requires money for her life and for her dignity. Now, in this situation, at the time of death, we pay a lump sum value to her, so that this is taken for the benefit of paying off any loans or mortgages or other things. Then the future investment, which was supposed to be done by Mr. Ram, will be done by Max Life Insurance, which will be done by company, as if the retirement solution was complete and as if Mr. Ram was alive. And therefore, Mrs. Ram will continue to get 3,81,168 rupees, irrespective of change in market, irrespective of whatever happens. This is a guaranteed value which is going to come to her. And the maturity as a lump sum, which was supposed to come as 36 and a half, exactly same value is going to come to wife as a lump sum. So this ensures that this is a comprehensive and complete retirement solution, not only for the husband but also for the wife. As I mentioned, the retirement does not come only for one individual, it comes to the couple together. So this product has many flexibilities of payment options of 15 years, 12 years, 8 years, and many other options which you can choose from. When you talk to your advisor, he or she will be able to guide you. So this is one kind of retirement solution a lot of non-resident Indians are investing in. Now there's another product which is very unique, very important, and I think lot of people are looking at this product when it comes to investment. This also I will explain in a simple story, in a minute story, which will help us understand why do we invest money in this product. This is a story of a person who retired at age 50 20 years back in year 2000, and he invested in a, usually when we look at guaranteed products or a guaranteed investment, safe and secure investment, we look at a deposit, a bank deposit, or a bond, or something product like those. Now he would have invested 20 years back, let's say 1 crore rupees in a fixed deposit in India. Now year 2000, which was 20 years back, that time Indian banks or bonds used to give around 12% interest rate on a per annum. Now this person would be very happy at that time that I got 12% return, but the bond always have a duration. Now this usually a deposit is for 1 year, maybe 1.5 years, 2 years, 5 years, sometimes 10 years. Bonds also are in a similar nature of 5 years, maybe 10 years. They are subject to renewal after the maturity happens. So let's say this person would have invested in bond for 10 years and he got 12% rate of interest. That is, after 10th year, in year 2010, he would have renewed the fixed deposit. Now at that time, the interest rate would have decreased, and actually it was, he would have got 10% interest. Now it means that the bonds are subject to interest rate risk. If the interest rate in market comes down, then they also gives you a lower rate of interest. Now in year 2010, he would have invested again for 10 more years. In year 2020, which is now, this bond would have matured. And when this bond would have matured, this person would have renewed the fixed deposit. And now the interest rate he was going to get is 5.7, maybe 5.5, maybe 6%, depend on different banks. Now, therefore, in the next 10 years time, he's again going to renew this fixed deposit. I don't know what is the interest rate going to be. Maybe it may be 2%, it may be 3%, it may be what, 2.5%. But surely the trend line clearly mentions that the interest rates are coming down year on year. So the fixed deposit and bonds returns are decreasing year on year, year on year. Now, when you look at expenses, I'm sure the expenses in your country would be different, but we have represented the expenses with thali. Now, thali is a famous food which we come when you, I'm sure you would have come to India and would have eaten somewhere, maybe at home, maybe outside. The cost of inflation we have tried to represent it with thali. Thali used to cost around 20 rupees 20 years back in India, and in year 2010, the cost of thali was around 50. Same is the case, in year 2020, 150 rupees today. I don't know what is going to happen 10 years from now, but surely this cost is going to go up. May not be at the same rate in your country. Different countries have different inflation rate, but India, the inflation rate is so much. In every country, there is an inflation, maybe at a lower rate, maybe at a higher rate, but inflation is always there. So the cost of living is increasing year on year. Now, the summary is returns on our deposit rates are coming down. However, expenses are constantly increasing. So if we trust fixed deposit and deposit or bonds, then the challenge in retirement and products like those comes live. Let me share with you what are the options and what are the life post retirement. So let me share with you if you can go to the next slide. It talks about life post retirement. How does it looks like? I'm sure if you are retired or you would have seen people retired, you would have seen that they want money for maintaining their lifestyle. Nobody wants to reduce the lifestyle. Now, for maintaining lifestyle, you require a lot of money. You have to fulfill your dreams, which you are not able to do. You want to go vacation, maybe somewhere else, which you are not able to do when you are working. You also have to protect your health. Many countries, especially Canada, the health is on the state, but many other countries like US and many other European countries, health has to be taken by yourself or by the insurance company. Now in insurance, there are co-pays which we have to pay for. So therefore, we need to also have money for protecting our health. Fourthly, we have also sometimes people wants to leave a legacy for their next generation, so that people in the next generation remember them. All these things requires guaranteed fixed income, not only for few years, but they require money for the lifetime, and I mean to say lifetime of the person. For this reason, we have a product called guaranteed lifetime income plan. If you go to the next slide, we will be able to mention you how much and how this product works. So Archana, if you can go to the next slide, please. So it talks about guaranteed lifetime income plan. Guaranteed lifetime income plan, as a name suggests, the entire product is guaranteed. All the returns are guaranteed. It is safe and secured. Secondly, it gives you lifetime income. I mean to say lifetime income. It means life of the person who invest in that, till that time the income is comes to that person. So this gives you guaranteed income, lifelong income. You can plan your retirement early. You can you can do a legacy for your next generation. You can also do a joint life, and their complete flexibility. I'll be able to explain you this in detail in the next slide with an example, and that will help you with how it works. So this is an example of Mr. Sangwan, who is age 50, and he's employed. He has got money because of his savings over a few years he worked with, and therefore he wants to plan his retirement. He has a lump sum value to invest in. So let's say he has a lump sum value of one crore Indian rupees. I just give an example of rupees. So he has invested 1 crore at the age of 50. When he turns age 60, he's going to retire. And when he retires, he is going to get a guaranteed amount of 11 lakh 27,100 rupees. So 11 lakh 27,100 rupees will be given to him every year, year on year, till he lives. I mean to say my word, till he lives. Whether he lives till 75, 85, 95, 100, 120, maybe 150, doesn't matter. Till Mr. Sangwan lives, the same amount of money is going to come to him, irrespective of change in the interest rate in the market. Interest rate on the market does not impact the returns and the money which is coming to this person every year. The day when he is no more, his wife, if she is alive, she also requires money for her living, for her dignity. And therefore, I'm sure you will see, agree with me, females live longer. If you look your society and you will find old age people, you will find more females than males. Genetically, they live longer. So Mr. Sangwan has also a responsibility towards his wife, that she also gets income even if he is not there. So we will give the same amount of income to Mrs. Sangwan as well, which is 11 lakh 27,100 rupees year on year till she lives. Till she lives. Whether she lives till 100, 120 or 150, doesn't matter. The day when Mrs. Sangwan is no more, we will give the entire lump sum value which Mr. Sangwan paid, and we will add up 5% to that, which means the amount of money will become 1 crore 5 lakhs, and we will give to the children as a legacy. So this way, this is a complete comprehensive solution for retirement of both husband and wife, and also creating a legacy for our next generation. If you look at some of the reasons and some of the people, or who all people are investing in this kind of lifetime income plan, there are two I can say categories. Number one, people within age bracket of 45 to around 65, 70 around, those people who are going to come back to India and at the time of retirement, those people are investing money in this, definitely, for sure, because you plan your retirement early. Second, those people also who are not going to come to India, but if their parents or their families are living in India and they send money, instead of sending money every year or month basis, whatever way you want to send money, better you invest here, because you get a very, very good interest rate. You can always calculate by yourself. If you invest 1 crore and you get 11 lakh 27,100, approximately 11.27 lakhs, 11.27% interest rate, guaranteed, not only for 1 year, 2 year, 5 year, 10 years. It is for lifetime. Therefore, better to invest money. And when they invest money for their parents, parents will get money, lifelong income till they live. And the day when parents are no more, then the entire value which you have invested can be repaid back in your own country, wherever you are going to live, whether in India or whether in US, Canada, wherever you are going to invest. So that's a second product where people do invest money in. Now, there's another product which is also important, which I'm going to share, which is a guaranteed product, and I want to share with you why a lot of people are investing money in this. The previous product which we have mentioned was a product where you invest in lump sum. Now, there are many people who don't have lump sum, and they say, okay, I have a small amount of money which I can save over years because I earn money every year, and I want to save money every year. I want to invest money every year as if I'm doing a SIP in mutual funds or like those. But I want a assured return. I want to assure return. So people look at deposits, bonds. Now, again, the challenge comes is the bonds interest changes year on year or day by day. So let's say I take an example of myself. I invest money every year, let's say 500,000 rupees every year. Now I take a route of deposits or bonds. I go to a bank and I ask banker that, okay, I have got 500,000 rupees. Now you tell me how much is the interest rate. So banker says it is around 5.5%, 5.5%, maybe 5.6%. So I say, okay, banker, that's good, great. Now tell me, I'm going to invest next year as well in month of August, same amount of money because I want to have a discipline in my life for investment. So bankers, and I asked, how much is the interest rate you are going to give me next year? So banker says, sorry, sir, today I can't tell you. You have to come at that time. Whatever is the applicable rate at that time, that rate will be applicable on your next year investment. Same is the case on my third year investment. Same is the case on my fourth year and going and so forth. Maybe eighth year, maybe 10th year. Rate of interest is going to change every year. Now my goals are same. I want to save money for my child's higher education. I want to save money for my child's marriage if I want to give some gift to my children. Or I want to save money for my retirement at the time of maybe 15, 20 years from now. That is guaranteed. But if the interest rates are not guaranteed, I have to save more money if the interest rates comes down. That is the challenge with lot of our investors which they talk about. Now for them, we have come with the product is called as Assured Wealth Plan. In this product, it's the name itself says assured. Everything is assured in this plan. So in this product, when you invest at first time, we will tell you what is the interest rate we are going to give, not only on your today's investment, but also on your future investments as well. So we are going to tell you that today you are going to get this, and the same rate of interest will be applicable on your second year, third year, fourth year, fifth, sixth, seventh, eighth, ninth, tenth, whatever number of years you are going to invest for, same rate of interest is going to be applicable irrespective of the change in the interest rate in the market. And that's very important when we talk about investments in guaranteed products. There is no product where you can get a guarantee rate of interest on your future investment. This product can give you a guarantee rate of return at the time of today's investment on your, all the interest rates of your future investment as well. So we will be telling you at the age of after 15th year, maybe after 20th year, maybe after 16th year, how much is the money you are going to get guaranteed, which is not going to change at all. So thirdly, this also comes with a life insurance coverage. I'm sure you will say, I have got life insurance coverage in my own country. Why do I look at life insurance? I agree. However, uh, you know, God forbidden, in case of an unfortunate event, when the family gets money from life insurance and there's extra money which they are going to get, they are not going to say that it was a less money, right? So therefore, it is an added advantage which you have this in product, but it gives you, the majority product is, it gives you guarantee rate of return, not only on your today's investment, but also on your future investment. So this is the product which I am going to share with you in detail in just 2 minutes time. So if you go to the next slide, you will find There's a comparison between fixed deposit, certificate of deposit, and bonds. I already mentioned the benefit. Fixed deposit bonds are very, very good investment. They give you guarantee, they give you safety, everything is fine, and they are liquid. But the only challenge with them is the rate of interest changes every year. Therefore, we have come with a product called Assured Wealth Plan, which has all these things, plus the rate of interest is fixed, irrespective of change in the market rates. So for our all the important milestones in our life, like education, planning for our child higher education. I know a lot of people tell me that, Dinesh, my child will take a student loan. Agree, they will take a student loan, for that also they have to pay interest on their life. They will become responsible, and all those are right. But as parents, we would like to give some amount of money as a seed capital for their children's for our children's higher education, for their marriage as well as a gift. They can get married without any cost, but as a parent we would like to give some money, as a gift to our children when they get married. Surely you would like to save some money for your retirement, your own retirement. So this can help you in a guaranteed value creation when you want to plan for any of these important milestones of the life. There are many multiple options of investment in this product. There are multiple combinations depending on, and permutation combinations depending on your requirement. There are 5 years payment and 15 years maturity, which means you pay for 5 long years and you get after 15th year. There another option of you pay for 5 years and you get a redemption at the time of 20th year. You pay for 8 years, you get an option of 16th year. So many permutation combination examples are there. Let me give you one example of 5 years and 20 years. If you can go to the next slide, Archana, this will show you amount of money which we are going to give you. Let's say you are age 40. You are age 40 and you are investing 100, so let's say 10 lakh rupees for 5 years. And after 20th year, we will tell you how much is the money we are going to give. So it will be 1 crore 33 lakhs 24,450 rupees. Exactly rupee by rupee, exactly same value we are going to give you, irrespective of the change in the market rates. So therefore, this gives you an assured maturity, assured redemption value, which you are sure of. Now, these are the different products which we have for you. There are various other options as well, so if you can go to the next slide, Archana. Yeah, sure. Please go ahead. Go ahead. Yeah. So there are many options available. As I mentioned, there are many multiple products. I have not mentioned an equity product with you. There are equity products available. There are many other dividend based products. There are many guaranteed other products, and there are health insurance as well, which is about cancer insurance. It's also important for people to take that. It's very expensive to cure cancer, and therefore this gives you a lump sum value. So there are various multiple options available. Because of paucity of time, I was not able to explain in each in detail, but my request to all of you is, once if you can block your time with the advisor, he or she will be able to explain you in detail. Let me go to the next slide, which is again very important, and then we will take your questions post this slide. These are the unique propositions by Max Life for our non-resident clients and OCIs. Uh, Not only products are important, not only returns are important, but customer service, which is most important, which we always look forward for. As I mentioned in the beginning of my webinar, that we want to be the most admired life insurance company. So therefore, we have done a lot of work for creating propositions for our non-resident clients. Let me explain you in detail. This would be very important from non-resident client point of view. We have created with the help of our clients whom they have asked for. Now, so the first thing is that you can buy when you are in India or whether you are in your own country. Doesn't matter. Wherever you are, you can invest. Secondly, very hassle-free documentation through digital medium. Nothing, no courier, no paperwork. Everything is digital. Thirdly, you can pay in any currency, in whichever currency you want to pay from. For example, if you want to send money in US dollars, you can send in US dollars. You want to pay in Canadian dollars, you can do so. You want to pay in British pound or in euro or in dirhams, dinars, whichever currency which are tradable in the world, which are tradable, you can invest in Australian dollar, New Zealand dollar, Singapore dollar, Canadian dollar, US dollars, British pound, euro, Swiss franc. All those tradable currencies are options are available. Fourthly, most important, I'm sure you would have not heard this, but when you hear this, you will find a value in this. Very easy remittances of claims for NRIs and OCIs. In India, wherever you invest your money in, maybe it's a fixed deposit, maybe is a real estate, maybe gold, maybe life insurance, maybe mutual fund, wherever you invest money, at the time of redemption, at the time of redemption, uh, you have to have an Indian bank account, because the redemption will come to your Indian bank account. However, in Max Life, that is not so. If you want to have an Indian bank account, that's good. Many people say, I don't have an Indian bank account. Many people say that I don't want to maintain an Indian bank account because there are a lot of hassles. I want to, do transactions. Otherwise, it become dormant. I will not be able to make it active. They require a lot of KYC documents, and therefore it is hassles. So therefore, we have a unique web method that if you pay in any foreign currency, which is any currency apart from Indian rupee, then we can pay you back in your own currency or whichever currency you want us to pay. So for example, when you are in Canada and you pay us in Canadian dollars, and at the time of maturity, you are in India, let's say, we can pay you in Indian rupees. Or if you are in US, you can pay in US dollars. Or if you're back in Canada itself, we will pay you in Canadian dollars. You have to choose the currency at the time of redemption. Which currency you want to take in, we can do the change accordingly. Lastly, it may be important for you because even if you don't buy a life insurance or you don't invest with us, it could be an important information for you. It is the goods and service tax. Whichever product you buy from India, when you are in India or you are not in India, if you buy a product from India, then you have to pay a goods and service tax. It's like VAT in the US, maybe in Dubai as well. Many other countries levy taxes, indirect taxes on the purchases. So India also levies. However, there is another section in that law called goods and service tax. If you are a non-resident of India, then you can ask the seller that I don't want to pay goods and service tax. He or she can exempt you or waive off the goods and service tax, provided you pay for that service or you pay for that goods from your NRE account, or you pay from your FCNR account, or you pay in your foreign currency. This is on the seller if they want to exempt it. It is not mandatory on the seller. If the seller agrees, he or she can do it. Max Life does it. As I mentioned, we want to be the most admired. From customer point of view, we will do everything what is possible under the law of land. And the law of land clearly mentions that as a non-resident, we can exempt you from paying goods and service tax. So whatever goods and service tax which is applicable on your investment which you do with Max Life, we will waive it off, provided you have paid money from your NRE, FCNR, or you have paid in foreign currency to us. That's how. So even if next time when you come to India and you, let's say, go for shopping, maybe buy or maybe go for restaurant, and the seller says you have to pay goods and service tax, you should ask for that I don't want to go pay goods and service tax. Yeah, but before buying it, and not after that. But before buying it, you have to tell the seller that this is my address proof of US or Canada, wherever I live, and I am paying you from my NRE account. This is my document which proves that I have paid from NRE account. Please waive off the goods and service tax. If it is tangible enough, I think it is worth enough. So this could be an added advantage to you when you have come to this webinar. So thank you so much. The next steps, where to begin, discuss with your advisor. The person who has invited you, I request you to please take out 40 minutes of your valuable time. And I think, with this time, The advisor will be able to understand your needs. Advisor will be able to understand what you really require, how much whether you require repatriation, non-repatriation, or whatever way you want to save money for in India. It is worth enough for diversifying your investment. Some part, may not be all, but some part of your investment as a diversification you should do, as a recommendation, and block your time with the advisor. Thank you so much for listening to me. Thank you so much for listening to me. Over to you, Archana. If you have any questions, please feel free.
Yeah, thank you, Dinesh, for the valuable session. And I'm getting a lot of private messages that it was really impactful. And a lot of questions are there. So I will take the generic questions. So the first question is about the currency fluctuation. What is the impact of currency fluctuation if we invest in India?
Okay, so thank you for this question, Archana. Is this question about US dollar, or you have any other currency as well?
US dollar.
Okay, great. A lot of US based clients ask this question, and I think it is important for me to share this. I will be very logical in answering this. As a chartered accountant, my left brain works better than right brain. I'm not very emotional. So I will look at what the mathematics talks about. Let me share with you I have made a slide. I think, yeah, there's a slide in front of you for US dollar. There are various other slides as well for British pound, euro, and Canadian dollars, or any other currency. If you want to, we can share that if you want to. We have made a slide in front of you. It is US dollar. Now, people say US dollar is getting stronger, Indian rupees getting weaker. It's agreed. Um, I agree on that. Definitely it is. It is going. It is that the trend line is clearly on that. But as an investor, I will look at why Morgan Stanley is investing so much of money in India. If they also know that Indian rupee is devaluating. Why do you think Vanguard has invested a huge amount of money? Why do you think Facebook has invested Google invested $10 billion? There is a reason. I will have a thought in my mind. There should be some other thing happening. So I did this calculation, and look at this calculation. And I have not taken 5 years, 6 years, 6 months data of US dollar and Indian rupee. I've taken a little longer period to find out a trend line in the US dollar Indian rupee. In 2006-7, actually Indian rupee appreciated over US dollar. In 2009 till 2011, Indian rupee appreciated. So therefore, we don't know if you take 1 year, 2 year, 5 years. This is not the right representation of how currency changes. So if in 20 years time you look at, there is a clear trend line. If you look at 20 years back, which is year 2000, the US dollar was approximately 43.69 to be precise on May. Today, the rate is around 75, 76, 74, let's say 76.
I think there is some network issue, Dinesh. So we'll wait for Dinesh for another 1 minute.
Is it okay now? Is it okay now? Is it okay now?
Yeah, we can hear you.
Sure. Sorry, the mute button was there. So I am so sorry for that. So I was saying 20 years back, the US dollar was 43.5, around 43.6. Today, the US dollar is around 75, 76, 74. You can take 76 for that matter. If you put this data in a CAGR calculator, just to take a Google search or whichever search engine you use, and put search about CAGR calculator, and put the starting value as 43 and ending at 76, and the number of years 20, you will find the depreciation rate is around 2.82%. To be precise, 2.82%. Now, when you invest in when you invested at 20 years back, and you would have withdrawn in 2020, you actually suffered a loss of 2.8% on your yearly returns. Now, in life insurance, you do not invest in lump sum. You invest over a period of time in a staggered way. So you average out the rate of US dollar as well. So today, let's say you pay 7.5 lakh rupees, you will send 10,000 US dollars. Next year, you will not send 10,000, you will send less than that, maybe 9,800. And every year you will send less. Therefore, you will average out. And therefore, the depreciation rate will come to 2.3 if you are investing for 5 years. Now, when you look at Indian market and when you look at equity market or maybe market of US, if I don't want this Indian rupee devaluation problem, the best way I can do is I invest in US in their either equity or either debt, right? Or maybe gold and silver, other options are there. As I mentioned, that doesn't matter. Now, if I invest in US equity, we have seen Dow Jones and many other markets of the US, it has given on an approximate basis 6%, and you have to pay capital gain tax as well. There is no depreciation of Indian rupee. You are investing in dollar, so you get in your hand 5.1 in your hand. And I'm talking about long-term capital gain tax in the US. When you invest in Indian equity market, the rate of return in Indian equity is higher, approximately 12%. On Indian equity market, you have to pay tax in the US at a base slab, around 10%, and not around, exact 10%, which is a base slab. So you pay 1.2 as tax, and there is a depreciation of 2. Let's say 8. I'll remove 2.8. Let me take 2.3, whatever. So you get around 8%, 50% more than what you would have got in equity. Secondly, if you would have invested in US debt, the rate of return in US debt could be in range of 0.10, maybe 0.50, depending on different bank. But you have to pay the slab rate tax. After tax, you will get maybe 0.07, maybe 0.2, maybe 0.3. In Indian debt market, you are going to get 6 minus all depreciation and tax. You get 3.1, which is very, very high. And that is why a lot of Indians are investing money in India. Not only, all their money, but definitely they are diversifying money, some part of their value in India, definitely from this manner. And that's why a lot of companies are diversifying also. They also have a analyst. They are, they also know that Indian rupee is devaluating. So, looking at that, some part of the money should be diversified to different markets for diversifying the risk. That's about US dollar, Indian rupee fluctuation. There are many other currencies as well. If there are other currencies which Indian rupee has appreciated also and depreciated also, depending on different currencies. Euro, dollar, maybe pound, different currencies. So we can share with you in detail if you really, if you block your time with the advisor. We have different presentations for different currencies and countries, so we can share with you in detail. Over to you, Archana.
Yeah, thank you, Dinesh. Another very important question about the repatriation. How.
Okay. Can you explain what's the question?
Yeah, how we can repatriate. I mean, if we pay the premium in foreign currency, can we receive it in foreign currency?
Exactly. So yeah, the Reserve Bank of India, which regulates the foreign exchange management, and there is a Foreign Exchange Management Act. It clearly mentions that if a life insurance company receives money from a non-resident in any currency, let's say any currency means any foreign currency, then at the time of redemption, the customer can choose to take out money in his own currency, whichever currency he or she wants to. Maybe in Indian rupee, maybe the same currency in which he is invested, or maybe any other currency he wants us. So let's say a person living in the US wants to save money for his child higher education, and this child is going to get, and after 20 years, the child is getting graduated in Australia, maybe. Now, therefore, the child requires money in Australian dollar. So we will transfer the money in Australian dollar to his child's account. So that's possible.
Thank you. Also from the NRO account, if we take it in NRO account, how is the repatriation?
Okay, that's great. That's a good question. Non-resident ordinary account, which is NRO account in India, does not allow you a freely repatriation. However, let me tell you, Indian laws of repatriation are very, very easy, very, very, better in terms of the way it has been, mentioned in the act. The NRO account money can be repatriated, definitely can be repatriated. However, Indian government says that you have to pay tax on that value if the money which you received is taxable. If you have received money from a source where the money is taxable, then you have to pay the tax first and then you can repatriate. Life insurance money is completely tax exempted in India. life insurance which you are investing, so the product which I mentioned, assured wealth plan, monthly income advantage plan, all these plans are tax free in India, so it doesn't have to pay any tax. Now therefore, if you are paying from your NRO account, you can very easily transfer money to your own country up to 1 million US dollar in a year, up to 1 million US dollar in a year. That is permissible by law. Not on this law is not only for this year, it has been there for last 25-30 years from now.
Yeah, thank you, Dinesh. So, and what are the tax implications for maybe for USA and Australia if we take the maturity in
Okay,
our country?
sure. So as I mentioned, when you are living abroad and you are investing money in India, you have to deal with two countries' laws. Number one, India, and number two, the country where you receive the money. Now, if you are looking at Indian tax law says the money which you invest in India is completely tax exempted. You don't have to pay any tax. Number one. Now, at the time of taking the redemption, if you are, if you are in, let's say, in US, or you are in Canada, that country's tax law is applicable. Now, what that country tax law says are different. Different countries have different tax law. Let me tell you about tax law of US. India and US. A lot of people say, Archana, that especially from people in the US, that I have to pay tax at the slab rate in the US. Um, I differ from that. There is a treaty. There is a tax treaty between the US IRS and Indian Income Tax Act, which is Central Board of Direct Taxes. The US IRS and Indian Central Board of Direct Taxes has formed a treaty which is way back, long time back, around 20 years back. This treaty is named as Double Taxation Avoidance Agreement. In short form, people say DTAA, Double Taxation Avoidance Agreement. Now, Article 11 of this treaty, you can also go to IRS website or in Google search or wherever search engine you can put off Double Taxation Avoidance Agreement treaty between India and the US. So in that you will be seeing Article 11. The Article 11 says that the maximum tax rate on an insurance proceed which you have to pay in the US is 10%, which is a base federal tax law. So that's the tax implication in the US. In different other countries, there are different other tax laws. So in Canada, it talks differently. In in other parts of Europe, you have to pay different tax. In UK, there's a different tax. We can always mention you the tax treatment in different other countries. We have a very good understanding of international taxation. We can share that.
Okay. So are there going to be such informative sessions in the future? Yes, we will keep on having such sessions. So you can be in touch with your, the person who has invited you. And then they want to know the entry age of GLIP, I mean, Guaranteed Lifetime Income Plan. If somebody wants to invest 1 crore, so what will be the age, and, or it will start from, at what age? The pension will start at what age?
So, yeah, that's a good question. The guaranteed lifetime income plan, I'm sorry, I was not able to tell you at that time. It has also got a lot of flexibilities. You invest in lump sum. You want to take money immediately. You want to take income after 1 year, maybe 2 years. You can defer for 5 years. You can defer for 10 years. You can defer for 1 year. As per your choice, as per your requirement, you can design the product or you can design the investment as per your choice. So therefore, you invest in lump sums and you get income from the day when you want to start in. You can choose between immediately to 10 years. The more you delay, more will be the interest rate, and that's how it works. Now, so therefore, that's how the guaranteed lifetime income plan works.
Okay, thank you, Dinesh. Um, Talking about asset class, what percentage of the portfolio you suggest to be in life insurance?
That's a good question. Life insurance is as many financial planner talks about, health insurance and life insurance are basic necessity when we talk about financial planning. From an investment point of view, life insurance should be treated in par with the deposits and the guaranteed products. Now, whether you invest in guaranteed products, maybe bank deposit, maybe whatever, it depends on you. The thumb rule says that if you are very young, put a lot of money in equity. If you are having a good amount of income and surety of about income, you can always take mortgages and put money in real estate. Some portion, maybe 10%, maybe 15% now, maybe 5%, depending on what you want to have safety amount. That is, you should put in gold and silver. um, However, from a guaranteed product point of view, I still believe that you should invest at least 15 to 25% of your value in guaranteed products, which helps you securing that capital and returns as well. When it comes to guaranteed products, you can choose between fixed deposit, bonds, and life insurance, which I was talking about, as per your choice. So if you want liquidity, if you want money anytime, then bank deposits are good. If you don't want liquidity, you have liquidity with many other options available, then you should go for an assured wealth plan, which I was talking about, that gives you a long-term guarantee. When it comes to equity, you have many options like mutual funds, direct equity, you have life insurance as well in that. So if you are very young, put a lot of money in equity. That will always give you very good returns. If you are 45, 50 years old, then you should put less money in equity, more in guaranteed products. We have seen in recent past, not recent past, just recently in month of March, February, that the people who were going to retire in next 5 years time, they are feeling jittery that what will happen to their equity portfolio. And that's why this asset allocation is up to the kind of age. And second, what is the amount of money you are investing. So let's say I earn $100,000 in a year, and I am investing, let's say, maybe let's say $4,000 in this. That's not big amount for me. 4% of my earning is going in some products, so I can take risk on that, or I want to safeguard that money, depending on what I want from that product.
Okay.
Okay, so
Yeah,
there is a question I can see. I am from Nigeria, Africa.
yeah, this is
Is
very
Africa
important.
high risk area? Uh, doesn't matter, sir. No problems. Uh, there are many places where we do give insurance. Nigeria is one among them. Kenya is another one. Mozambique is one of them. Some of them we don't give, but most of them we do give. We give insurance and we give investment options to people living, to our NRAs living in, and OCIs living in Nigeria and Kenya as well.
So thank you, Dinesh. So Dinesh, I think we have addressed all the generic questions, and there are personal questions like, what are the age limits and entry age for a particular product, and what is the rupee currency fluctuation, and, minus the inflation and devaluation of the rupee. So we have everything, as per your country, because every country has their own currency fluctuation impact, their own tax implications, and all of you have your own financial goals, own financial liabilities, and you have a different standard of living. So what I would suggest is that you can talk to the person who has invited you and book a meeting with you, so that they can see what best they can offer you according to your financial goals. So that's it from our side. So thank you so much. We will share the recording with the person who has invited you, and you can take the recording from them. And again, thank you so much for coming. So thank you so much. That's it from our side.
Thank you everyone for joining in. Appreciate your time, taking out your time for almost 1 hour, 15 minutes. Really appreciate. Thank you so much.